Dear students, today we are going to study about the cash flow statement. Okay, in today's class, I am going to tell you how to prepare a cash flow statement. Of course, you already know about the cash flow statement, the meaning of cash flow statement, why it is being prepared, what are the important features, what are the objectives of preparing cash flow statement, etc. etc. All these things we have already studied. The theory part we have already completed. Okay. Still, I will just go through this particular part once again. That cash flow statement preparation is mandatory for joint stock companies, and in this cash flow statement, the flow of cash, whether it is cash inflow or cash outflow in a particular company, is very clearly shown under different headings, that is under operating activities, investing activities and financing activities, right? So under each activities we find out what is the cash flow, cash inflow, what is the cash outflow, and what is the net cash flow. So basically this cash flow statement is having mainly three sections, that is operating activities section, investing activities section, then financing activities section. Okay, so dear students, it is very easy to prepare this cash flow statement if you see certain important points very carefully. Okay, right. So here we have a question. You can see this question in the left hand side and the solution in the right hand side. Solution in the sense that we are going to solve this question. Here I have already drawn the format of cash flow statement, which is a very simple format. I have drawn only the relevant items I have taken. So you just follow this particular format. In some questions there can be some more items, some questions there will be less items, so only the number of items differ, and the basic format is more or less same. Almost all the important headings and subheadings I have included here, so you can learn this particular format, right? Okay. Now, as I already told you, this cash flow statement is divided into mainly three headings, three steps. The first one you can see it here, number A. I have given cash flow from operating activity. So under this section, we will complete and find out. We will find out the net cash flow under operating activities. Operating activities is the bread and butter of a company. That is the main activity, day-to-day activities of a particular business, right? Okay. Now to start with, you see the question, see the balance sheet. In the balance sheet, as you can see, first the main part of the balance sheet is there, then below that you can see notes to accounts. In most of the questions the balance sheet and the notes appear in this way. This is a standard format of a question, balance sheet and notes to accounts. Here, as you may recall, the balance sheet is presented in vertical format, no horizontal format is there. Okay, so this new format you will have to follow. So this will be given in the question. Okay. So in each case you can see in the note, wherever there is the details given, subdivisions are given. Of course, in the first part, in the balance sheet, first part, we will see only the main headings, and wherever there is subheadings or subdivisions given, there it is represented by note numbers. We can see note number 1, note number 2, note number 3, etc. So each note is explained in the notes to account section very clearly. You can see it here, 1, 2, 3, etc. Right? Okay. Now if you can see in the balance sheet, it has got basically two main parts, that is equity and liabilities. Under equity and liabilities, shareholders funds is given, then reserves and surplus is given, and there the subsections are given. You can see that below reserves and surplus, you can see there is balance in statement of profit and loss. It is given very clearly. So shareholders funds is there, non-current liabilities are there, current liabilities are there. All the three make up the equity and liabilities part. Then there is asset. In the assets section also there is non-current assets, which is fixed assets. And in fixed assets, you can see the note. That means the fixed assets classification, the categories are there. That is tangible asset is there, intangible asset you can see below in the notes. Then there is current assets. So non-current assets and current assets both make up total assets. So the first part of the balance sheet is divided into two, equity and liabilities, then assets. Okay. Then in the notes to accounts, as we have already seen, reserves and surplus is given, fixed assets is given, then cash and cash equivalents are also given. So here also only the heading will be given in the main section on the top, and the categories will be given below if there are categories. Okay, so here there are categories. Cash and cash equivalents consist of cash in hand, you can see, cash in bank. Another important item you will have to note is the way the amount column is written. Okay, the first column is meant for the current year, second column is meant for the previous year. In most of the cases it will be in that way, it will be arranged in that way. This is the standard format, right? So what we have to do is, from this balance sheet and the notes to accounts, and in most of the questions there will be adjustment. Of course, in this question there are no adjustments given, no additional information is given, so that makes this question very simple. So with additional questions, adjustments, we will do another question later. Okay, so what we have to do is, from this given balance sheet and the notes, we have to find out the cash inflow and outflow. So we have to take only the cash inflow or outflow items. So we pick up those cash inflow and outflow from here and put it in this cash flow statement, so that the cash inflow and outflow under each category, that is operating activities, investing activity and financing activity, it will be very clear for the management, for analysis purpose. Okay, right. So what we need to do basically is, from this balance sheet main part and the notes to accounts, we pick up all the cash inflow and outflow and put it in the relevant section. Okay, so that is the most important thing. Okay, so we have to know which item is coming where and how much. So two important things, dear students. So here when we see this cash flow statement, you can see the three sections. As you can see it here, cash flow from operating activity, then cash flow from investing activity B, cash flow from financing activity C. Okay, now what are the items coming under these operating activities? Of course, the cash flow statement starts with the net profit. Okay, the first main heading which is coming in this cash flow statement is net profit before tax and extraordinary items. You can see it here right under the cash flow from operating activities. You can see net profit before tax and extraordinary items. Okay, so here we have to consider the net profit. You have to take the net profit, current year's net profit after all the adjustments. Okay, so here the adjustments means we have to see the adjustments with regards to dividend, with regards to general reserve, with regards to taxation, etc., etc. But in this question, no such items are given. Here there is no dividend information is given in the balance sheet. Normally this this dividend, it will be coming as a adjustment item. Okay, so in this particular question it is not given, so we don't have to consider dividend, we don't have to consider taxation or provision for tax, that is also not there. And there is no reserve also. If reserve is there, that also will be given in the section reserves and surplus. You can see, dear students, you check the notes to accounts there, reserves and surplus. Under reserves and surplus only net profit is there. There is no general reserve. If general reserve is there, then we have to adjust that with the net profit, and only after the adjustment we will have to take the figure here. So the first step, we pick up the net profit after the adjustment. So as I have already told you, there is no adjustment with regards to net profit. We pick up the net profit directly. So how this is being solved? Now you see reserves and surplus. You can see the reserves and surplus here. You look at the notes to accounts, you can see 2019 it is 58,000, 2018 it is 50,000. That means previous year net profit was 50,000 and current year's net profit is 58,000. I hope you can see it here. Just a moment. Okay, you can see the net profit here. It is 58,000. So previous year it is 50,000, current year it is 58,000. That means 8,000 increased. So that 8,000 will be the net profit of current year, right? So in this way we will have to compare the figure of current year with the previous year. Then you see how much is increase or how much is the decrease. If it is decrease, it will be loss. If it is increase, it will be profit. So here it is increase, so 8,000 is the profit. So how it will be written, I will show you. So the net profit section, we have to simply write the difference 8,000, right? Okay, so I have written 8,000 here. Okay, so that is the first step. You write net profit in the amount column. Then the second step. The second step is about adjusting the net profit with all the non-operating and non-cash items. That means we will have to reverse whatever items, non-operating items and non-cash items are adjusted before calculating net profit. We have to do the reverse to get the original net profit, right? So in this particular case, we have to pick up depreciation. We have to pick up depreciation, of course, is a non-cash item. So similarly, there will be other non-operating items like debenture interest, like loan interest, etc. There can be non-operating expenses, there can be non-operating income also. So in this particular question, no such items are there. Even depreciation is not there, but there is one particular item is there, that is goodwill written off. You can see this goodwill here, where in the balance sheet, if you refer the balance sheet, you can see in the notes under fixed assets, intangible asset, you can see goodwill, right? You can see goodwill here. So you follow this goodwill and you see the two figures of current year and figures of previous year. You can find that Previous year it was 60,000, current year it has gone down to 45,000. That is because of amortization of goodwill. Goodwill is written off. We say instead of written off, amortized. It's intangible asset, that's why. So 60,000 goodwill, it is amortized to 45,000. So there is a decrease of 15,000 rupees. So this 15,000 rupees we put it here, where just after net profit before tax and extraordinary item, before this 8,000, you can see goodwill is added. So remember students, all those items which have come in the debit side of profit and loss account, it will be reversed, it will be added back. We have to just to do whatever is subtracted earlier, we will be adding to the net profit to get the original figure. So that is the adjustment after writing the first item, that is in this case 8,000. So to 8,000 goodwill written off or amortized will be added. So that is 15,000. Okay, so that is the second stage. So first step, adjust the net profit and write it here. Second step, to that net profit you add all the non-cash items and all the non-operating items. Okay, you have to add or subtract. So in this particular case, in this particular question, there is only one item to be added. So we have added that goodwill amortized 15,000. So we will be getting total 23,000. So that is operating profit before working capital changes. Okay, so after getting this operating profit, we have to adjust the working capital. We have to find out the working capital changes. So when we say working capital, we mean the changes in current assets and the current liabilities. So it is very simple, dear students. Here in the balance sheet, you have to pick up the current assets and the current liabilities one by one. Okay, then you will have to see whether it is increased or decreased. Then we will have to adjust it accordingly. So here you simply follow the format. That is, you have to add whatever decrease in current asset is there, you have to add. So along with that, whatever increase in current liability, that also you will have to add. So for addition, to add, there is a decrease in current asset and increase in current liabilities. Both have to be added. And what is to be subtracted? It is just opposite, that is increase in current asset and decrease in current liabilities are to be subtracted. So this is a standard format. In the standard format, you include all the headings as I have written here. Decrease in current asset, that is a heading. Then whatever current assets are decreased, you will have to add, you will have to put it one by one below. Then take the total and add it. Okay. Then increase in current liability, you put the heading. Then whatever current liabilities are there, you put it. If it is increase, of course, you put it here. Then similarly, you do it is just opposite in case of current asset increase and current liability decrease. You simply follow the standard format. Okay. So I repeat, add, decrease, all decrease in current asset and increase in current liabilities. Then subtract all increase in current asset and all decrease in current liability. So you simply pick up the current assets. So here you can see the current asset. In the current asset, we can see trade receivables. You just follow the white ball here. You can see 1,07,000, 1,30,000. That means 1,30,000 has become 1,07,000. There is decrease. So we have to put it here. Then there is one more item, that is prepaid expense. That is also current asset. You can see the prepaid asset here. You can see. Remember, only the decrease we'll have to consider. Okay, so 3,000, here it is nil. That means it is completely decreased. So two decrease current asset items are there. So both will pick up and simply put it here. Okay, remember only the difference. Okay, so find out the difference and put it here. So in the first case, it is 23,000. You can see 1,30,000 minus 1,07,000. It is 23,000. Then prepaid expense, it is completely gone, that is 3,000. So decrease of 3,000, you put it here. You can see that here 3,000, right? Then increase in current liability. If you go to current liability section, you can see trade payables where it is there. Trade payables, you can see there is increase, right? So that difference you will have to, so if you calculate the difference, you will get it as 23,000 again. So put it here. Then increase in current assets, you'll have to subtract, just opposite. So you go to the current asset. In current asset, there is increase of inventories. You can see 2 lakh has become 2,80,000. So there is increase of 80,000. So put it here, 80,000, right? So when you put this 80,000, it is decrease. You can see less is written, right? It is decrease. So it is minus item, right? That means subtraction. Okay, so we are subtracting, so it is minus item, so you put it in the bracket. Okay, you can put it in the bracket. When you do it manually, you do it in bracket. It is Excel, so it has come as minus. Okay, so you can put it in the bracket. Bracket means minus. So the less items, both the categories will be coming as minus. Okay, so inventories is written as minus 80,000. Then decrease in current liability, there is if you go to the current liability, there is already one item is there, we have already written, there is no other item, so it is nil. So there is no decrease in current liability, so it is put as nil. Okay, so now you take the total of all the remaining items. Okay, here already you have 23,000 total, right? Then there is 3,000 positive, again one more 23, then minus 80,000. So you take the combined total, so you get 8,000. So this 8,000 is, I think it is minus item. Okay, it is minus item. So it is minus. Okay, so I have put it as minus. Otherwise you can put it in the brackets, no problem. Right. So this 8,000, you will get the net here, and from that you'll have to subtract tax if there is any tax. Of course, in this question there is no tax, so it is not a problem. So you just leave it. There is nothing, so you can put nil. There is no tax. If tax is there, you will have to write. Okay, always keep this standard format. Okay, so that you won't forget. Okay, this particular item. Right, so write this tax if it is there. In this particular case there is no tax. Now you again take the grand total of this. Okay, so you will get 80,000. Okay, so that is the cash, sorry, 8,000, that is the cash used in operating activities, right? So you get 8,000 here, and the same 8,000 you put it here, and write the heading as, or answer as, cash used in operating activities. Used denotes a decrease, cash outflow. So there is a cash outflow because it is in minus. So if the figure is negative, you write used in. If it is positive, you write from, cash from operating activities. Okay, so here I have written cash used in operating activities since it is negative item. So here it is 8,000, the same 8,000 is written here so that it will be very clear. So this is the first section. Okay, you can see A, you have got the total, net cash flow from operating activities, we have got 8,000. So in order to show it clearly, in order to identify this particular figure clearly, it is written in the outer column. So the first answer, it is written in the outer column as cash used in operating activity, right? Then we go to investing activities, right? Okay. Dear students, it is very simple. Whenever we talk about investing activities, we talk about fixed assets. Investing activities are directly related to fixed assets, nothing else. Okay, so you already completed operating activities. Now we come to investing activities. When we see the investing activities, we see the purchase of, we see the fixed asset, and the fixed asset is there. You can see in the balance sheet. You can see the white board. See how it's moving. Fixed assets. You can see number 2, not number. So number 2 is given here. Tangible. because intangible we have already considered. यहाँ पे हमने जो लिया है already goodwill, so only the tangible part is left. You can see it directly. See, last year 172, current year 296. Okay, you simply find out the difference. Okay, you find out the difference, so that will be purchase of plant. Purchase of plant, because there is no case of depreciation given here, so no need to prepare any ledger accounts, nothing. You directly you find out. So here fixed asset is increased. Why it is increased? Because plant is purchased, that's why. So put that difference as purchase of plant. You can see it here, purchase of plant under B. So first we give the heading cash flow from investing activity, then we write purchase of plant. Of course it is cash outflow. When we purchase plant, we pay money, so it is going out. So it will be coming as a minus item, so we put it here. You see, 1,24,000. You subtract, you will get 1,24,000. So 1,24,000 we have written. Since there is no other item, the same item we put it here also. Only one item is there, so the total will be the same. It will be again cash used in investing activities. As I already told you, this is cash outflow because it is negative item. So we write used in. So here you can write in bracket. So investing activities is also over. So investing activities is the easiest part, because you just think of fixed asset. There may be plant, there may be machinery, there may be some other fixed assets, building, etc. There may be a long-term investment also. So in this particular question, there is no investment and other fixed assets, only one item, so we put it directly. So 1,24,000 is the second answer. The first answer is operating activities in minus. Second answer investing activities again in minus. Now financing activities, the third one. So again very simple. When we think of financing activity, we think of this. You just come to this shareholders fund in the question. You think of share capital. We think of share capital. We think of any debt. It may be equity. It may be debt. Okay, financing is related to equity and debt. So how much money is raised through issue of share capital? You just see, it is given. You can see it here. You see share capital, you can see in the question, you can see current year 4 lakh, previous year 3 lakh. So 1 lakh worth shares issued. Okay, issue of share capital or issue of shares is 1 lakh. So we put it here. Simply we write issue of share capital. You can see in the cash flow statement we put it share capital. How much? 1 lakh. Okay, this is a plus amount. Cash is coming, cash inflow. So we don't put a bracket and all. We write simply 1 lakh. Then so share capital is done. Now you see another one, debt. It is about a debt. Okay. So another source of finance is debt. It is given here under long-term borrowings. You can see mortgage loan. You can see 170, 140. Now it is just opposite. Like last year 170, 1,70,000. Current year it is 1,40,000. That means it is decreased. Why it is decreased? Because we repaid. Okay, we redeemed some of the loan, a part of loan. Okay, so if there is decrease, it will be cash outflow. If it is increase, it will be cash inflow. In the share capital, it was increase, so we have written plus 1 lakh. But now here we have to write minus 30,000, right? So that we will be writing here minus 30,000 to put in the bracket. Okay, that is payment. Okay, so this we will have to, all this in the cases, situations, you will have to just imagine, you will have to visualize. So it will be very easy. You just see whether cash is coming or cash is going. If cash is coming, you put it plus. Cash is going, put it minus. Very simple. Cash inflow, cash outflow. So now you take the total. Because there are no other items related to finance. So other possible items will be payment of dividend. Payment of dividend is not there. Another possible one is a payment of debenture interest. Of course, there is no debenture, nothing. So that interest will not be coming. So these are the normal items coming under financing activities. Okay, a share capital, maybe equity share capital, preference share capital, debenture, loan, debenture interest, dividend, etc. all those items related to financing will be coming under financing activity. So we have got here 1,30,000, so we'll be getting 70,000. We put it here plus. Now you have got operating activity plus operating activity you minus 8,000, investing activity is minus 1,24,000, and financing activity, as you can see from here, it is plus item. So we have used the term, remember, flow from financing. We haven't written used in. We have written from. That means it is positive figure. So 2 negative figure, 1 positive figure. Right? Now all the three we take the total. 8,000, 1,24,000 both minus, negative, and positive 70,000. So when we do that, we get minus 62,000. That is a net increase. Okay. So from this operating activity, investing activity, and financing activity, we get the net cash outflow 68,000. It is minus of cash outflow. It is okay. So it should be actually net decrease. Actually, it's not a net increase. Here increase is written, but it is a net decrease actually. Okay, you may just correct it. Right? Okay, it is net decrease. It's a negative figure, 62,000. Okay, now with this, what we have to do? Basically what is the meaning of this? That means during the current financial year, this was the total cash outflow. Okay, in this particular business, because it is given as minus. Okay, so if that is the case, then we add this net increase or decrease. In this particular case, it is decrease. We add this particular figure to the opening balance. Opening balance of cash and the cash equivalents, because this is the change. Okay, cash outflow. So with that change, we add what was our opening balance of cash and the cash equivalent. There is cash in hand and cash at bank, both are given here. You can see in the cash and the cash equivalent, you can see note 3 is given. So here the 3 is given in detail. You can see cash in hand, cash at bank, and it is, you can see opening, you can see, just a moment, opening, this no, this is the closing. Opening, you can see it here. This is opening, this is closing. Okay, for opening you will have to add both. Okay, this 50,000 is cash in hand and the cash at bank 30,000, that means 80,000. Okay, but you will have to write it separately. So 2018, this is the opening balance. 2019, that is the closing balance. So with the answer you got here, you have to add the opening balance, that is 50 and 30. Okay, so we do it here, 50 and 30. You can see it here, 50 here, 30 here. So we put 80 here, right? Opening. So when we add this 80 to our answer here, we should be getting the closing balance. Closing balance is 16 and 2. You can see 18,000. So it should be coming automatically. So let us see whether it is coming. So 16 and 2, whether it is coming automatically. So it should be 18,000. So it is coming automatically 18,000. You can see that here it is minus 62,000. Minus 62,000. If you add to 80,000, you should be getting 18,000 plus figure. Okay, so this is matching. In this way we can check our answer also for this cash flow statement. Okay, so basically this is what is or this is how a cash flow statement is prepared. So cash flow statement is basically about operating activity, investing activity, and financing activity. Okay, so you can see it here. You can see it here. The first stage, that means the first part, second part, third part. Then we take the answers together, so we get a fourth part. Then to that fourth part we add to the opening balance of cash and the cash equivalent. We'll be getting the closing balance, it will be matched. So looking at this cash flow statement, we can clearly see how much is the cash inflow or outflow. Here it is very clear. You can see it here. There is cash outflow of 8,000. Here it is very much clear. Investing activities, there is cash outflow, that is 1,24,000. Financing activity, there is cash inflow, that is 70,000. Okay, so out of these three, if you add all the three together, we will get to the net increase or decrease. So in this particular case, this is a decrease, 62,000. So with that decrease, if you adjust that with the cash equivalent opening, we should be getting the closing cash and the cash equivalent. So in this way, we get a clear idea about the cash inflow and the cash outflow under operating, investing and the financing activities very clearly in the cash flow statement. And for this purpose only, this cash flow statement is prepared by the management, dear students, to understand the cash position in the business. So in this way, we have to complete a cash flow statement. So this is a basic format. So in some questions there will be more, some questions there will be less. In some questions we will have to prepare the ledger account, especially when there is a depreciation, provision for taxation given, we will have to prepare ledger accounts also. That type of one model we will be doing later. Okay, so this is a basic model. So you practice with this model and you try to understand how this cash flow statement is prepared. You learn the format. When you do many questions in practice, you will be automatically learning the format. Okay, learn the format. Format does not change, only the items under the sections will change. Items change, figures change, that's all. So I hope you understood this cash flow statement, the the basic procedure of preparing cash flow statement. And another day we will do with another question with adjustments. Okay, right. Thank you very much.